It's Tuesday, May 11th. This is The Street Live. I'm Catherine Ross, and I am joined by Jim Cramer. Jim, what are you watching in the markets?
Well, the market's pretty much in free fall, but we have to remember the levels that we're talking about. When you're down 600 points in the Dow, and the Dow's up at 34,000, it's, you're talking about less than 2%. So you have to stay a little more grounded and look at the percentages. Don't look at the larger numbers. The Nasdaq is now finally starting to put in some performance. They foolishly, the day being the traders, started the rally way too early, and you knew it was going to collapse. The only rallies that really work started at 245. A 245 rally that sustains is the way that a bottom occurs. Now, if you believe in a bottom today, what you do is you buy the stocks that are in the green right now. So you would buy Norton LifeLock, which is an action alert name. You would buy Roblox, which had a fantastic quarter. I don't understand why Merck is up, but you can see them by Amgen. Eli Lilly was just up. Now, we know that's an action alert name. There's problematic situations, but it doesn't matter. That's what you do. You can't take a risk that you're buying a stock that is going to go down big. And the way you find the ones that won't are the ones that are in the green when the markets are free fall, because those are going to track the most money.
Jim, it's interesting. When the Nasdaq was really leading us lower earlier this morning, I was asked on Twitter to get your thoughts on the tech growth stocks of the Robinhood era and whether or not that this is a bubble. And Jim, you know how I feel about using the word bubble, but I will use it here because I think that we're calling everything a bubble nowadays. But could this be considered a bubble that's popping, and could we see tech settle back into levels that we saw pre-pandemic?
I like to do the fundamentals. And yesterday we had a call that the great part of the tech world, which is the internet, which is a lot of it is in the case of digitization, publications, and publications have viewers. And the call that was made yesterday by Bassinet, which really hurt things to Google and Facebook, was that things are going to plateau. The ads are going to plateau. And Trade Desk didn't agree with that, TTD, but Trade Desk was destroyed and it's being hurt again. So that's one skein of thought. Then the other skein of thought is Tesla, and Tesla has to bottom. On Squawk on the Street, I said Tesla has to bottom. The Robinhood, I think that when you look at the stocks that Robinhood, the main stocks they buy, I'd say like 2/3 of them are real companies, good companies, and 1/3 of them are just, I don't know why they buy them. But there's a Wall Street Bets group who has no respect for me, and I have no respect for them. And then there's a Robinhood group, which I think is teachable and can really gain insight and are terrific. I mean, just terrific. So I've never denigrated the Robinhood people, and they still opened a lot of accounts last week. And I think that they are searching for a way to buy things, and they have to buy things that they're not used to. There was a really good call about Lowe's today, how Lowe's is having a great garden day. And it's down $9. I mean, if I were not frozen on so many different things, I would go buy Lowe's right now. I would say Lowe's is a winner. Home Depot down 11 with a great gardening season and a great housing market. That can be bought. I like that. But you have to train these people not to just buy all tech and how to be diversified, not to just use call options, not borrow money. And all of these things are an anathema to successful investing. So I just, I see that the Cathie Wood stocks, though I call them Wood stock, are trying to rally here. So you've got Teladoc rallying. Maybe she's buying it. I don't know. Palantir coming back. And it wouldn't shock me if people feel that the way to stabilize things is to have the Wood stocks go up. But I see things that are encouraging. I mean, we own DuPont for Action Alerts. We'll talk about that in Action Alerts video. And that was recommended by Goldman Sachs today, and a very big upgrade. I suspect that the what you do in a big sell-off is, one, you look for the stocks that are in the green from the get. And two, you look for upgrades, where the upgrades specifically state that they had a view that wasn't positive, and now that view is positive, and that would be DuPont with Goldman. Or you look at a situation where there is a change in fundamentals, and we'll talk about that later. I don't want to reveal the name because it's proprietary to Action Alerts.
So let's focus in on Palantir really quickly, Jim. It is, as you noted, pushing higher. It's about 3.4% right now. It was in line on earnings and did beat on revenue. And as you noted, this is a very popular Cathie Wood stock and it's favorite of Wall Street Bets. So we haven't talked about it in a minute. What do you make of this stock here?
Well, I mean, it's very hard to see the stock go down very big, okay? And it went down very big last night, and then it went down very big this morning. But I knew that it should be down because it didn't blow away the revenues. I don't expect it to go back to 22. But if I were Cathie Wood or her disciples, I would say, okay, well, Palantir's okay. I mean, the stock is down from 45 to 19, and it's down 20% this year. So that's an interesting level. Now, when I look at what Palantir is doing, I saw that the revenue growth was tremendous. They're not making, again, they're not just sitting there and printing money. But I do think when I look at the volume of 104 million shares, I know that that's what's called a stand. They're making a stand. The Wall Street Bets people, perhaps some of the Robinhood people, and Cathie Wood may be making a stand when you see that level of volume, because that level of volume, frankly, is insane. It's completely out of whack with what a stock. This is not a stock. This is a battleground. Palantir is a battleground, and right now the bulls, or whatever you want to call them, the renegades, are winning. And that's because the quarter just wasn't that bad. Now, that's not necessarily a reason to buy a stock, but it wasn't that bad.
You did note earlier this morning that an ARK Invest ETF could be the right play for a 5-year perspective because Cathie Wood has such conviction. So I'm wondering, for those who don't want to jump into Palantir alone and are looking at our ETFs instead, how can investors balance an ARK ETF with the rest of their portfolio?
I don't want to do it. I think that a lot of those companies that she likes are not great. But I could totally understand that if someone says, look, I want to surrender to the future, and she's got the crystal ball. Okay, well, you can buy it. That's not the way I would do it. I would try to pick individual stocks. But when we put up the stocks on the board of what she owns, I found some of them. I love Twilio. I think Twilio is great as a company. It's just the stock price is not good. Spotify, I've been a big backer of that. So I mean, there's two kinds of names of hers. There's the ones that are very good tech companies whose prices got too high, and then there's the stuff that is you get the printout of at 648, which is the one that they're all kind of abstruse names. Many of them just came public, and those maybe she's got a real beat on them. I don't know. When I look at them, and I looked at them, most of them seem to me to be not great, not differential. But the big ones, which I hope she's not just using as cash, the big ones are pretty good. But she paid too much for them. Or put it this way, she didn't sell them when maybe she should have. But I'm in a similar. Oh, here someone says China data points to smartphone market slowdown in April. Says Evercore. Now, there's been no sign that there's been a smartphone slowdown. Tony Saganegi says there's not a smartphone slowdown. But this is the kind of thing when what an analyst might do, and we're seeing a lot of this, is when they see stocks down, they try to find out, they come up with something, and they'll go with something that I think is not that authoritative, which is a survey on smartphones, China. So people do anything.
Jim, you had an interesting tweet this morning that I want to ask you about, and that's about GameStop, because I want to hear what you said, that you have a plan for GameStop that Wall Street bettors will love.
But
so what's the plan?
It involves the 20 million members of rewards members of GameStop, but that's all I will say right now, because there are enough Wall Street Bets people who hate me, who are watching, that I want them to pay for real money, because that's the ultimate revenge. So if they're hating me, which is fine, I've been hated by many over the years. So I've spent that much time on the cross. If they decide they hate me, but they know that I'm writing about GameStop, for all I know, they'll buy a subscription. But I've got the solution for Ryan Cohen, and I think he's going to use it. I think it's the best solution I can offer. And I think that Ryan Cohen will get it. And Ryan Cohen is actually probably plotting this right now. I have to admit, frankly, it's really smart. And, it's all I can say, though, because I think it's really important for people to understand I'm protecting the price point of real money for the people who get real money. It's not fair to give this to on the free show, but it's real good.
All right, so you can go to realmoney.com to read Jim's piece on it when when it's published.
Oh, you betcha. I'll signal it on Twitter.
There we go. And we will blast that out.
Yeah, Jim, it's the right thing. They got to get Twitter they got to get GameStop going. See, they got Palantir going. They have AMC going. They must get this GameStop going. And I think it's going to be, I'm going back and forth with Jeff and Sav.
So Jim, I want to take this opportunity to talk to you about L Brands because they are getting going.
It's just one moment, Catherine. Jeff and Sav, people who I work with on ActionAlertsPlus.com. They're my team. And
Jeff Marks and Zev Fima are both analysts.
And I feel like that when I do this free video, I also have to worry about the people who pay. And I've got it great.
Of course. And we will head on over to Action Alerts Plus in just a moment to talk about all of the AEP stocks that Jim is talking about with Jeff and Zeb. But before we do that, Jim, I do want to get to L Brands because they're spinning off Victoria's Secret and Bath and Body Works instead of selling it. So we've been talking about how the pandemic has given malls a new lease on life due to the eagerness to shop. Do you think the spinoff is capitalizing the strength of the mall, and do you think it can last?
Well, it's capitalizing on I think the gullibility of investors to some degree. I mean, it just had an unbelievable move. Now the numbers are very good for L Brands, but the move was spectacular, and I think the move has kind of happened. Now I do like some of the tape here, but I'm not going to go there for the L Brands unless Cathie Wood goes there with this teledoc that she's moving probably right now.
And last night on your no huddle offense on Mad Money, Jim, you warned viewers that nothing kills a bull market more than oversupply. So I'm wondering what's your advice here? I mean, how do investors balance their portfolios in a market where there's too much supply and not enough demand?
Well, they can't. I mean, you got to just wait. You got to let things get blasted. Okay, you got to just. This is what people are getting blasted, and some are going to leave. Some are going to stop looking at the market and put their statements in the drawer. That's really dangerous because you have to try to figure out which ones are good or bad. And some are going to be able to say, okay, listen, I am going to pivot to the companies that are very good, that offer good dividends. I mean, what am I really offering here? What am I telling young people? I need them to discover more than just what's in this, okay? They're like always about the damn app. And I really respect that. They're smarter than I am about the apps. But this isn't an app market. It's not a go-to market. It's not a total addressable term market, a TAM market. It's not a land and expand market. It's a market about companies that have great brands with great balance sheets and great dividends that can buy back stock and be able to pay for the commodities that are going up and raise their prices themselves. That's what it is. So Chipotle, Home Depot, Procter, Costco, PepsiCo. This is what you buy. Now, they're not, I need to train them that it's okay to have some of their app names and software names, data analytics names, semiconductor names, but they have to have a diversified portfolio. And today's the kind of day that you leg into a diversified portfolio. That's what you do.
I'm so glad that you said that, Jim, because your Mad Money opener from last night really tied into diversifying and just how important it is, especially on days like today when it's just a sea of red out there. And you've just named, I think, about 5 stocks that you like, but I'm wondering if there's maybe a couple of sectors that investors can eye when they're really trying to diversify their portfolio away, perhaps from tech.
What to like in tech is going to be Apple. Adobe's doing quite well. We obviously like Facebook, which had a great quarter. Alphabet had a fantastic quarter. Microsoft had a fantastic quarter. Now, I know these are same old, but I don't give a damn. I don't have to reinvent the wheel all the time. I mean, this is just great stock. And I feel like that the problem I have here is that everybody knows the damn tech stocks. I'm trying to get them to focus on I'm trying to get them to focus on different kinds of stocks, on stocks of companies that frankly they're not aware of, that exist, that they need to be aware of. I mean, look at what we did with Norton LifeLock. Okay, if you want to have a hold off a cyber attack against you personally, Norton LifeLock's the best product. We held and we held and we held. People got bored of it. It doesn't matter. But it is not a tech stock. But it plays in the tech universe. Okay. People say
Well,
it
and
plays in the tech universe.
so you just mentioned earlier, you mentioned Walmart, Costco.
Oh,
These are
Walmart.
stocks. Yes. So I'm wondering, away from tech, what sectors are you eyeing at this point to diversify in?
Well, consumer packaged goods companies that have staying power, retailers that have staying power, manufacturers that have staying power. Those all work for me. And when I'm speaking about manufacturing, I mean, DuPont right now is up 23 cents. If this market's going to turn, it's going to turn to DuPont because Goldman Sachs upgraded it today. That's how markets turn. And markets feed on stocks that have done incredibly well. So United Parcel is one we own for Action Alerts. That will turn. Nike was recommended today. That turns. So you want to find a combination of companies that can afford to take price increases. Nucor is a good example. And companies that are just doing incredibly well. UPS, Union Pacific down 3 today is very attractive. So I'm trying to present different kinds of stocks to young people so that they recognize that it's important to be in a fully diversified portfolio that does not just call options on tech stocks, because that's how you get blown out. Now, why do I speak of this? I had a radio show in 2000, and I begged people to sell tech every single day. Begged them to sell Enron too, but begged them to sell. Begged them. I took a lot of calls, and I just, and I took a lot of heat. And what happened is that I liked tech until we went up 1,000 NASDAQ points in about 3 weeks. And then even though there were stocks I liked in January that I wanted to sell because they moved so much in 2 months, and people felt that was a great portrayal. But I said, look, I bought them. They went up huge. Time to go. And people said, I'm not a hedge fund. I'm not a hedge fund, whatever. But my main thesis was that you got to get out of tech, and you can keep some, but only keep the strong ones. And I don't want to focus on them. I want to focus on other things that I think are terrific. And yes, you can go buy Apple. I have no problem with buying Apple. You can, but I'd rather see in DuPont. Rather see an Abbott. I'd rather see an Abbott than Apple. And I know that Boeing's down a lot. I like Boeing very much. Boeing's going to have another bad quarter. They didn't get the Chinese certification. But, that stock's going to go down, and you have to buy it before it turns. Linde, having an amazing quarter. Recommended today by several firms. That's the kind of stock you buy.
And let's end right there. We are now heading over to our Action Alerts Plus daily rundown show over on actionalertsplus.com. Come join us over there. I'm Catherine Ross, and we'll see you tomorrow.